using lender credits to cover your closing costs on this week's Mortgage in a Minute. All right, guys, so this week we're talking about lender credits, what they are and how you use them. So many times I get approached by real estate agents and clients and they ask me, Zach, how can I get my closing costs covered? Well, there's one of three ways to pay your closing costs. It's either you pay them, your seller pays them, or you possibly get lender credits, or of course, a combination of all those. But on this week's Mortgage in a Minute, I want to focus specifically on what is a lender credit. Now, a lender credit is when your lender elects to give you a higher interest rate voluntarily by yourself, higher than what we call the par rate. Now, a par rate is the rate that's available to you based on your credit score, your terms, and the loan product that you select. So let's just use an example that you qualify for a 3% interest rate. The lender can take you up to a 3.5%, again, voluntarily by you. You're electing to do this as a consumer, and that higher interest rate is going to pay what we call a rebate back to you in the form of a lender credit. So many times borrowers are not getting their offers accepted right now because they have the down payment, but they don't have the ability to cover the closing costs, and they want to know what their options are. So you want to get with a member of Home First Lending and a loan officer to determine if you can qualify to get lender credits, because believe it or not, there are opportunities where you might get up to 3% of your closing costs covered on an FHA loan, and then depending on the other loan products like conventional, that might vary. But these options are out to you, and you should certainly seek those opportunities before going into an offer that likely might get rejected in this market. All right, guys, we'll see you back next week for another Mortgage in a Minute.